Hi everyone, welcome back to another Crypto Spotlight video. And today we're going to be talking about what's on everyone's mind, the Ethereum merge in about 2.5 days. And we're going to do a bit of a deep dive specifically into how the crowd is positioning themselves for this major event. What is the average person doing, and then what are the top traders doing, and how do they differ? So we're going to have a particular focus around the proof of work airdrop, which has got a lot of buzz at the moment. Before we get into all this, we'll just quickly, in case you're not sure, we'll just quickly define the merge. So basically, the merge is where Ethereum is moving from a proof of work consensus mechanism to a proof of stake consensus mechanism. In layman's terms, it's just going to make the Ethereum network a lot more efficient, energy efficient. And then in the medium term, six months down the line, it'll be a lot more cheaper in terms of gas fees and have a much higher transaction speed. So it's generally seen as an overall positive for the Ethereum network. However, people are very concerned about the short-term impacts of such a big event. So we'll just get into it quickly with the proof of work airdrop. And I think this CoinGecko founder summed it up quite well. So basically, you have the people who are mining Ethereum from, in proof of work that might want to keep mining as like a cash grab. And so they're more than likely going to airdrop tokens to Ethereum holders, just so they can keep processing transactions and using their mining technology to gain money. So it's basically a cash grab from the miners, and lots of people are positioning themselves in an attempt to grab these free airdrop tokens, as well as protect themselves from any sell the news event situations, which is kind of the big buzzword going around at the moment. Everyone's talking about a buy the rumor, sell the news event, which makes me believe it might be already priced in. So just in case you forgot from a few weeks ago when we were talking about airdrops, an airdrop is where free tokens are given usually to like bootstrap the liquidity of a new protocol. But in this case, like the CEO says, the fork tokens, they're going to be dead. There's no use case. So the airdrop really has no purpose, unlike SudoSwap, which we talked about a couple of weeks ago. I'll actually link that in the description below, because luckily they did actually have an airdrop a couple of weeks after it came out, and we were able to do some transaction volume and get, more than likely we will receive some airdrop tokens. That'll be a good video to watch just for an introduction to how airdrops work. But the difference is that a protocol like SudoSwap has a real use case where these proof of work tokens are effectively useless. So airdrops are used, free tokens are given out to incentivize liquidity, incentivize transactions, and give liquidity to a protocol. And people want to receive these free tokens. So the way they're doing that is quite interesting, and that a lot of people are hedging their Ethereum position. So they've bought some Ethereum on one hand, right? And then they're shorting it on the other to lock in a certain price so they don't have any price risk, to protect themselves from a sell the news event, which basically just implies that everyone is going to sell on the good news. That's what this theory is. So they're going to protect themselves by shorting, and they're going to receive these free tokens, which has currently caused the market to be in what's called backwardation, to where the futures actually trade lower, which isn't normal in this market. And so the theory that we're going to look at today is investors buying ETH spot and shorting ETH futures in order to collect ETH proof of work, POW airdrop. And we're going to see if this is actually true. And then we're going to see how can we actually take advantage of this as traders or investors. So I wanted to see, what does the data say? How do we know if this is true or not? So I went to the charts and to some interesting analysis. So here is the funding rate. And how the funding rate works is when it's positive, people who hold long positions that are leveraged pay people that hold short positions, and when it's negative, people that hold short positions pay those that hold long positions. And the reason it works like this is because if the market is imbalanced, the market makers want to encourage people to take the other side. So they implement what's called a funding rate. So, if prices are ripping up, going crazy, everyone's long, they might, it's a statistical calculation. They don't choose to do it. But a formula will spit out a certain rate that longs will pay to incentivize shorts in a bull market. But here we have the opposite occurring. And as you can see, this is the aggregated funding rate. It's blown out of proportion. This is a daily chart since about April. And even though, price has kind of drifted a little bit up, but not too much movement relative to years past, the funding rates have gone down dramatically. So lots of people are short and longs are getting paid to hold leverage long positions at the moment. So that's the first point that displays this concept. The second and most interesting point of the day is how top traders are positioning themselves for this event versus the collective, the crowd. So let's look at that right now by looking at the long-short ratio. So I'll look at that of top traders and the global, which is everyone, right? So we'll zoom in here. Get rid of the funding rate as well. Okay, so I think we can see, so this is the top traders here. And we're seeing maybe a little bit of a trend, a little bit of a divergence potentially starting, where you have top traders who are under 1, who are now at about 1.07. And then you have, the global, like the average trader, who were at 1.3 and now they're at well below 1. That's a massive 0.93. That's a massive drop. And so what these long short ratios show is the amount of people are long versus the amount of people that are short. And this one shows kind of think of it as where is the big money flowing. And the past week, we're kind of seeing a bit of an uptick and a bit of a downtick. And I think this is probably going to be the trend because, as we can see, the crowd is very focused on receiving these proof of work airdrops. And a lot of the smart money, if they are in the game, a lot of on the sidelines, but if they are in the game, they're starting to position themselves long because as these shorts, these people that have hedged to receive their proof of work airdrop, like we discussed earlier, right? These people buying ETH spot and shorting ETH futures, once they've received it, they're going to start to unwind that hedge, and that's going to put a lot of buy pressure in the markets, right? Because when you have a short and you want to close the short, you have to buy back the Ethereum. And so, in my opinion, we're more than likely going to see a big unwinding of shorts and a lot of buy pressure, and there's going to be a distinct lack of sell pressure because of the overall long-term bullish mechanics of the merge. So I would like to hear your thoughts on it. Do you think I'm wrong? Do you think it's going to be this big bearish event? Because there are a lot of opinions out there at the moment that are saying it's quite a negative. So it's, it's only 2 days away. But there's definitely a lot of variety and interesting views. Do you agree with me? Do you disagree? Any price predictions? Personally, I don't have too much of a price prediction. I just think that we're definitely going to see a lot of volatility over the next few days. And I think we're going to see maybe a leg up over 2,000. But, not overly confident on that one. So let me know what you guys think. And, continue to follow us on our socials, Instagram, TikTok, YouTube, all that. Don't forget to like and comment and subscribe to Ainsley YouTube channel. Have a good day, and I'll see you next time. Bye.